Hi, welcome to another episode of 10,000 Roads to Financial Independence. Today, I have MC Laupsher. He is a founder of Cashflow Ninja and the creator and host of top-rated business and investing podcast Cashflow Ninja and Cashflow Investing Secrets. MC is also the president at Producers Wealth, a wealth firm that assists investors and business owners to implement advanced cash flow strategies. And MC is the principal at the Producer Capital Partners, an investment firm that helps investors invest in alternative cash flow investment. Welcome to our show today, MC.
Thank you so much for having me. I've been excited to be on your show and excited for our conversation today.
Yeah, awesome. So we're going to dive in today in today's section, since MC is the owner of Cashflow Ninja, like he came up with the whole things. So we're going to focus our episode today on how do you create and find money, we call it couch monies, and be able to come up with more money than you think to invest in different things and then create more. And so today's episode is going to be all about that. So MC, we always ask our guests this question: growing up, who kind of influenced you as the entrepreneur who you become today? If there's a certain incident or a person that you can share with us.
That's a great question. Actually, I always knew about the world of business and entrepreneurship, but I have to say some of my earlier heroes, has to be Robert Kiyosaki when I read his book, Rich Dad, Poor Dad, in 2001. So it really changed. It gave me an insight to a world that I didn't know exist. Before that, I had a lot of sport heroes. I played a lot of sports. I got a scholarship actually to play rugby in university. And I actually ended up in the United States playing sports. So it's interesting that I had the same approach to playing sports and playing in a high level sports. And I took that same kind of mindset and approach to business because I did the same thing there. I always try to find the best players in my position. And then I studied them. What were they doing? What were their strength and conditioning, their diets, their recovery? And then I broke down hours of film of how they played. And then eventually when I finished university and I read Robert's book in 2001, while I was traveling for playing sports, that was actually the first person that really pulled back the curtain and said, look at this, there's a whole different way of doing life behind this curtain than what everybody has told you. So I found him. That took me down that rabbit hole. And I've just since then studied a lot of what he's done, studied a lot of what other people, just incredible entrepreneurs and business owners and investors do. But he was the one that showed me the way. So when and here's the thing too, when the student is ready, the teacher appears. Yeah. I didn't think I was ready before that. I was just focused so much on sports at that stage and trying to play at the highest level that I could. So I wasn't ready when I was younger, but when I became ready, he appeared.
Right. Yeah, that's awesome. That's awesome. And so I love the analogy you said, look at other people, successful people, what they do. And, that was one purposes of why we started the show over here, is to kind of looking at other people, what they do to be successful. Now, I understand that you have published a book, Cashflow Ninja, which teaches people all different ways to find essentially couch money to be able to use it for investment. Can you kind of round down a little bit, just a high level summaries of like, what are all different ways to find money that people didn't know that existed, to then reuse that money in a much more efficient way?
Absolutely. And I love talking about this. So I'm excited to share. There's a framework that I've seen and that I built in the 20 years of just having access to incredibly successful people, and then obviously interviewing the best minds in business and investing on my show, Cashflow Ninja. And essentially the parts of the framework is, the first part is capital creation, cash creation. People make their money somehow, either in their business or in the capacity of a high earning employee, but they make their money somehow. That's the first part. Then the second part is, well, you have to put that money somewhere. So where do they put it? Capital positioning is what I call it, and cash capture. Where do you put the money after you've made it? And then the next part is then deploying that money into cash flow assets or growth assets. And then the final part is protecting it all through proper tax strategy, asset protection, and estate planning. Now, if you want to look at where to find money, I look at capital positioning. And you look at, well, people make it, where do they put it so that we can
Right.
access it to use it and to use it for our investments. And for your listeners that are real estate investors, this will give you some ideas of potentially where you have money that you don't even know of that you can use to invest. And if you're raising capital for projects, you can have this this conversation with investors. Just share with them different ideas. So where do people put money? The first place that, and this is where most people are aware of, is 401ks and IRAs, right? That's where they have. Most Americans and most people around the world have either money in their house or in their 401k and the IRA, and that's essentially the bulk of it. So you can, of course, self-direct your 401k, self-direct your IRA to invest in alternative assets. And of course, if you have a house, you can tap into the equity of your house. And this is where it gets fun, because there's a concept called collateralization. Collateralization is essentially what you do with that HELOC strategy. And most real estate investors know about this. So they know that they can cash out, refi a house or a property, or they can use a HELOC, let's just say, for an example, in a primary residence, tap into the equity without selling that house. Now, how did they do that? They placed the equity of the home as collateral to the bank for a line of credit. And now you can take that line of credit and you can buy another property. You essentially have a property and you use that property to buy another property without selling that property. It's a very, very powerful concept, because this brings up, where do you find money? So if you're a business owner, you know, businesses have assets, whether it's equipment, whether it's receivables. You can go to a bank and place as collateral the assets of the business and get a business loan or a line of credit. We have someone in our network that they have a business and then they placed the assets of the business as collateral and they got a loan, and then they bought the real estate from which the business was operating. So they used their business to buy real estate. Now they have a business and real estate. You could do the same thing with a stock portfolio. And this is where it gets really interesting, because we just had a very interesting media event. It seems like that was what everybody was talking about, where Elon Musk bought a Twitter. And that's the headline. And that's where everybody stops looking at it. But as we have discussed, you and I are very interested in deal structuring. I'm interested to know how Elon did the deal. There you go. And you're just screen sharing it. That's amazing. And what he essentially did was Elon placed as collateral Tesla shares. So
this bucket right here.
Exactly. So Elon took the Tesla shares, placed it as collateral, and then got a loan secured by his Tesla shares. And then he used that to buy Twitter. Now, there's a lot of things at play here. Why would he do that? Well, the first thing is, if he sells his Tesla shares, he pays taxes on those. So he essentially got a tax-free loan. You know, and was able to access that tax-free. So he essentially then doesn't pay taxes on it, and his money is working in two places simultaneously, and he's got the asset-based loan from all of these institutions that are fighting over each other just to give him the money. That's a nice position to be in. But yeah, if you had to pay taxes on that 44 billion all of a sudden turns into, you know, depending on the taxes, 55, 60 billion that essentially would have cost them. That's a huge opportunity cost.
Absolutely. Yeah, absolutely. Because he's looking like he has put up 50% of pretty much the down payment, 50, 45, 50% over there. And then he got a loan, essentially, when you're thinking about real estate, is kind of like the senior loan or whatnot, about $13 billion from there. And then about $13 billion from this cross collateralization that he had on his Tesla company as a line of credit business, or some sort of a loan against the Tesla. You know, it can be a line of credit, or it can be just a loan collateralization loan. We don't know the details over there, but that's a very interesting chart. Like, I know, like this morning when I saw it, I was like, oh, then gotta take a screenshot of that, which is great. And then you can think about this. I'm guessing, MC, you're gonna lead up to this, which is like, you can think about this as the assets that you own. Now, tell us a little bit more about how do you leverage your stock portfolios to generate potentially more money or leverage out of that, in which give you more capital to invest?
There's some wealth management firms that will allow you to put your own stock portfolio down and borrow against it, and it's very favorable rates, very, very favorable rates. Now, of course, people have to be aware of risks and everything that they do. So when you do that, you have to be aware that when the market all of a sudden pulls back, there could be margin calls. So, we'll get how to manage that, but that's a great place. People think they have a portfolio and now they don't have any liquidity to invest in real estate, where it might be a great opportunity to just diversify into real estate using some of the equities that you have in this environment currently. That's essentially what Elon did too, right? Because they took Twitter from public to private. So that was also part of the move that he's doing so many things at the same time here. Yes. Taking a publicly listed company private and then leveraging his Tesla shares to do that helps him to diversify risk in a very, I would say a market that is pretty risky at this moment relative to other periods in time because of the uncertainty, the interest rate hikes, and all of the other things that are happening in the world, But that's another example. Then here's another favorite one of mine: your gold and your silver. People love gold and silver. And by the way, I love it too. And we have it for a certain reason, but it doesn't have to sit in a vault all alone by itself. Yes. It could have some fun. And what I mean by that is you could place your gold, your silver, and your art as collateral with certain custodians, and you could get a loan up to 50% of the value of your gold and your silver holdings, and even your art, and use that to go buy another hard assets, which pays you income like real estate. So that's a great conversation just to have and just to share this with folks. Another example, and it's interesting, just before I jump onto the call with you, I saw the news broke. Another example is cryptocurrencies. And most people would say, what? How do I do that? Well, you can actually, on centralized platforms, place your Bitcoin and Ethereum as collateral for a loan, cash loan, which you then can use to go and buy real estate. There's a transaction that Goldman Sachs just did with Coinbase that just broke in the news. It's like literally, I think, an hour after the story broke. But essentially, Goldman is issuing a loan to Coinbase, taking in their Bitcoin as collateral. And it's a pretty big one. So it's a very big collateralized transaction, which they just did, which is now public, is going to share with folks. Oh my goodness. Well, I can do this too as an investor. Right. I might have bought Bitcoin at, $1,000 a Bitcoin. And now it's, 40,000 at the time of recording, or just a little under that. So I don't want to sell it because I'm going to owe a lot in taxes. So what is the next best option? Well, I could place it as collateral, get a loan secured by it, and then buy real estate with that. It's a pretty good conversation just to have with investors. And then, of course, my favorite one is the life insurance one, where we have a life insurance strategy. Folks know it as the infinite banking concept strategy, using a dividend-paying whole life insurance policy with a mutual insurance company, which is structured for cash specifically. So the majority of your premiums are going to cash, while you can essentially set up that policy correctly and set up a credit line secured by your cash value up to 90% and in some cases 95% of your cash value within 30 days. The reason why I love the life insurance credit line is because, unlike the other assets, which has a lot of moving pieces, the life insurance, the principal is guaranteed. So the money that you put in is guaranteed. The growth is guaranteed in it. It also receives dividends. It's not guaranteed, but these companies have paid them since, the mid 1800s. We're talking like pre-war era. Yeah. So there's not a lot of fluctuation or any volatility in that, which is great because you're not going to get margin call on your life insurance line of credit. And you can get it directly from the insurance company, from financial institution, and also from bank. But essentially, it's a great strategy because of the guarantees and then the tax-free growth in it. You get to access the loans, your credit line tax-free. And then also you get to then buy, let's just say, real estate with it. And then there's a death benefit, which pays out a multiple of your account value to your beneficiaries. So if you combine that with real estate, let's just say, you have a pretty powerful combo because your money is doing double duty, right? In every single one of these examples, your money is doing double duty because it's doing one thing in one asset or in one vehicle, and then you can leverage it through great arbitrage strategies to do something else for you in a different asset. Imagine you've got the life insurance with all the tax benefits that it has, and then you combine that with real estate with all the tax benefits that it has. It's a pretty powerful punch between the two of them. But those are just some ideas. And what's interesting? When I share this, and I've spoken at numerous conferences and just share some ideas with folks of where to find for potential money, and it's all about capital positioning. So you might have some capital there that you can use, or you can properly position capital and restructure it so that you can use it. We've always find that somebody comes up to us and comes up to me and say, I didn't know that I could use my gold and my silver. Actually, had an older gentleman came up to me and he said, I have over $1 million between my life insurance policy and my wife in cash value. And he was about in his 70s. He said, are you telling me I can buy real estate with this? And I said, yes. He said, I guess the price of the ticket for this conference was worth it. And I'm like, yeah, I think so.
That's why I go to conference. Oftentimes I found there's any conference I go to that it's always kind of worth it with the ticket, even if you're just taking away one piece of the advice over there.
Absolutely.
Yeah. And then MC, tell us a little bit more. Obviously, all these details you kind of touch upon in your book, Cash Flow Ninja, but then also you probably go into more details on this. How does people kind of learn more about each method and the details and the nuances on that?
Yeah. So in the book that I wrote, the 21 best cash flow niches, I talk about the framework. I talk about different places to allocate it. And then I also talk about a lot of the importance of diversifying income streams. Even as a real estate investor, diversifying in different markets, through different assets, and you could do it in different asset classes and in different niches of it. But yeah, we talk about that quite a bit. That's very important. And of course, we cannot obviously forget that one of the greatest places to free up cash for folks, if they're just getting started or they're making the transition to becoming a real estate investor, is by reducing their taxes and getting the right people on their tax team and then their legal team. I always say those are investments, because the tax folks are going to find you money and reduce your taxes legally, and the lawyer is going to protect everything else that you're doing.
Right.
So between the two of them, it's an investment. It's really not an expense, but that'll also put some rocket fuel on what you're already doing, free up more cash flow in your economy and also, the money that you're finding, all those different assets, and think of other assets that you might have that I didn't even mention, that you could potentially look at to leverage and invest in real estate.
Yeah. So one question I always get from my investor was, hey, we're stuck. We have the 401k account, we have $1 million in the 401k accounts, but we're kind of stuck over here because we're not moving jobs, because we know like you can transfer this into alternative investment, alternative retirement accounts, and then be able to invest in more wider stuff when you move the employments. But what happens if people are just stuck? They love their job, they worked for 10 years, and they want to continue to work for the company for another 5. And so they're just staring at this really limited retirement funds of what they can use it on, like 10 mutual funds or whatever. Is there a way to kind of free up that?
Yeah. So, one of the things that we say is it all depends what your goals are, right? So if you want to be a real estate investor, you have to be a real estate investor. Right. So what do real estate investors do? They invest in real estate. So, contribute up to the match and not a penny more. If there's even a match, and if there's not a match, you could still work at the company. You just don't have to participate in their 401k or their IRA, or even set up a separate IRA. but you don't have to contribute in that plan. You can stop your contributions and then direct that to a different vehicle where you build up savings that you can then use to invest in real estate. So, but it all just comes back to, what do you want to do? What's the vision? What's your timetable? How focused are you? And then make the hard decisions. You know, it's if you want to be a real estate investor, I always say to folks, be a real estate investor.
Right.
Invest in real estate. Don't invest in the stock market or in stock sponsored mutual funds. If you want to create financial freedom through real estate, then invest in the real estate.
Yeah. And then, so also, what, in current market, it is like, what are you investing, or what do you suggest to your investor to invest in today's market? And what are some of the asset types that you think are what people should look into more, going into the period of stagflation, what they kind of talked about?
Yeah, that's a great question. So we're in an environment with a lot of uncertainties. There is changes, and it's just going to continue, and it's going to be fast and ferocious. There's going to be disruptions. There's going to be one crisis to another. It's not going to stop. And which, by the way, for investors, it's a pretty exciting time. These are all exciting times for investors, because this is where you can essentially capitalize on economic opportunities that you couldn't even dreamt of.
Right.
Because, people react usually three ways. The first way is they put their head in the sand and they pretend that nothing's wrong, and then everything's going to go just back to normal, be a hunky dory. The second part is they get so paralyzed by fear and panic because they watch TV and that's what they sell.
Yeah.
It's fear and panic. I said, I was joking about that to someone the other day, about what not to do. I said, if you want to just be very, very scared and panic all the time, watch TV. That's exactly what you should do. But if you don't want to be scared all the time and panic, don't watch TV. And then the third approach is to realize that this is incredible. We are living in an incredible time, during an incredible time, where there's going to be incredible opportunities. So back to your question, how does this play out? What do we do? How do we position ourselves? So the one way, and a lot of conversation has been around inflation. Now the numbers are pretty brutal, and it's not even accurate really from the government. 8 to 9% is the inflation number. Then you have John Williams with Shadow Stats saying it's more like 16 to 17, and he calculates it the way that it was calculated before the shenanigans started, and they started meddling with the numbers. What's the joke? If you torture data enough, it'll confess. But the third one too is the politicians in Washington, D.C. This is interesting. They just gave all of their staffers and their lawyers a 21% raise. So I'm guessing it's more closer to 20 to 21%. So that's already inflation. So will this continue? Yes, that's the one track, right? It could be massive inflation and continue. And you also mentioned stagflation with low economic growth and bad economic growth and inflation. That's a bad combo. What's interesting too is with most inflationary markets, you have all this currency that increases in supply, but usually the goods and services stay about the same, or they also become a little bit more. This time, the goods and services shrunk. Like there's less things and more money, which is just a recipe for recipe for disaster. So the other scenario is deflation. And people would say, how is it possible that there's deflation could happen? Well, there could be a wild card. There could be a wild card potentially. What is a wild card? Well, the bond market could pop. That's an enormous bubble, and the bond market is pretty much, it dwarfs any other market that's out there. The debt market is the biggest market. So that'll impact.
I think it was like a 60% or 70% the Fed balance sheet is in that bond market.
It's crazy. And it's, if that goes, then it's the stock market, it's real estate, it's cryptos, it's every single market will be affected by that. So that's a wild card event. So how do you position things? So what we have done is we keep it very simple. I always say to folks is when it's crazy outside in the environment, which it is, you want to keep things simple in your business and keep things simple in your investment strategy. So we have cash in one bucket. We have metals in another bucket, gold and silver. Then we have our cash flow portfolio, which is mostly hard assets, real estate and different real estate niches, some oil and gas, some different hard and commodity-based investments. And then we have a growth bucket, which is, your crypto bucket, your Bitcoin essentially can be put in there. And in those four areas, if you think about it, an inflationary market, there's a lot of those areas that are going to benefit. Your metals will just keep plugging along. Your cash flow bucket will just continue to do well, get appreciation and increasing cash flow. Your growth bucket will continue to do well. Your cash can then be used to purchase other things. But in a deflationary cycle, if there's a wild card, you're going to need cash. Your metals will take a hit. Your growth bucket will take a hit. Your cash flow bucket will still plug along. It's not going to go gangbusters as it's been, but it's still plug along if it was underwritten properly and the deals were good with the right operators. So that's kind of how we look at it. The cash is, it's funny. We've all heard this, and I've said this, by the way, as well. So I'm looking at myself too, but cash is trash. Money's losing value, all those things. But cash plays a very big role in certain environments as a volatility buffer. Cash is liquidity on hand that you need. If there's, let's just say, a problem with your real estate and you need liquidity, you can access it.
Right.
If you need to fix, for example, a margin call on a stock portfolio or on a crypto portfolio, you have cash. So cash still plays a role. That's why, because folks always ask, well, if you're in an inflationary environment, why would you hold cash? You have it for a volatility buffer. But that's kind of what we've shared with folks, what to do and how to structure things right now in a very uncertain environment. And if there's a big pullback, big inflationary event, you're going to have cash to go shopping, and everybody loves a sale, especially investors.
Exactly. That's awesome. One last question I have is where do you see yourself kind of taking the business that you have in 3 to 5 years where the midterm is? Yeah,
2025 is actually, I plan 3 years out, and we're looking to help as many people as we can during this time right now to protect and build wealth during this time. I grew up in South Africa during a very interesting time in the country's history, a lot of uncertainty, all the same stuff, disruptions, changes, chaos. And I went through that as a young man. So I feel like, being uncomfortable is almost like a safe place for me.
Right.
I'm comfortable being uncomfortable. So I feel that it's my calling during this time to, through our platforms and through our podcasts and tools and resources and programs, to continue to help people during this time to protect and build wealth. So we have a lot of other projects on the shelf, whether it be educational programs, whether it be books, and then through my other companies, we're going to do the same thing. Through Producers Wealth, we're setting up all these infinite banking policies for folks all across the United States. And through Producers Capital Partners, we continue to raise capital for great real estate projects. And we're going to continue to grow and help as many people as we can. But I'm pretty excited for the next couple of years. It's going to look a lot different 3 years from now, I think. I'm going to embrace all of the changes that's coming and capitalize on our economic opportunities and help other folks to do the same thing.
Awesome. And how do people find you?
Cashflowninja.com is the podcast. And for your listeners too, if they're interested in the book, the 21 Best Cashflow Niches, it's available on Amazon or at cashflowninja.com. For your listeners, if they grab a copy of the book, please screenshot. Everybody buys it on a smartphone. So just screenshot a proof of your purchase, send it to my team at info@cashflowninja.com, and we'll give you access to a digital version, an audio version, because a lot of people like to listen to books these days, myself included. A curated library of interviews of ninjas discussing the niches and more bonus goodies. So if they're interested, it's at cashflowninja.com or available on Amazon.
Awesome. Well, thank you so much, MC, for your time today. And we're going to put all these great links on the underneath there. If you like what we do, please click the like button if you like this video. And then if you like to kind of subscribe to our channel, you can get in tune with some more content. Perhaps we're working together with MC in the future, like webinars and etc. So look forward to it. Thank you so much for your time, MC, today.
Thank you so much.
Awesome. And this wraps up another episode of 10,000 Roads to Financial Independence.